Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. A lot to get to on today's show. We got about like 20 big earnings reports: Verizon, Twitter, Lockheed Martin, Procter & Gamble, to name a few. We're going to talk about the follow-through from yesterday's reports as well. We're going to talk about analyst coverage in LYFT, the rally yesterday in pot stocks. And if we have time, we'll take as many questions from the chat as we can. Our guest today, Nick Chahine, author of Create Income with Option Spreads. He will join us at 8:35 as he does every other Tuesday. Joel, what's the word here overnight?
Oh, you can only report today if you're going to beat earnings. Everybody is beating. That has the S&Ps in the green by $1.75, 29.14 and a quarter. Pre-market low, 29.08. That's just below your daily pivot and above the weekly pivot. I'm sure that will hold up for the low of the day. You have crude sneaking over $66 to 66.19, its highest level in over a year, but pulling back now, up only 7 cents at 65.62. Gold in the red by $4, 1273.70. No catalyst for the gold. And silver slipping below $15, down 9 cents here at 14.885. And is the creeper rally still going on in Bitcoin? Bitcoin up $165 at 5,560.
Wow.
Ooh, Dennis, listen to this. Wow. Volume. So 6,800, that's a lot for Bitcoin here. Are we getting some volume in this? Are the institutions finally coming into Bitcoin, Dennis? Let me see what the volume is.
Who knows?
Could that be right? 6,000.
The trend is your friend. The only thing you have is technicals on it. You know, we've talked about this
look
before.
At this.
Can you hear me, Joel? I don't even know if you can hear me.
I can. I'm sorry. Go ahead.
Okay. Well, keep talking. What is changed? Look at this. I'm intrigued.
The volume on the.
Well, I don't know what the volume normally is. I'm not a Bitcoin trader, and I never look at a Bitcoin chart. So talk to me. Well, how much? What are we talking about volume? Like a lot more volume? Like what's the deal? Enlighten me, Mr. Elconin.
I know you're in a bad mood because your Skype's not working, but don't take it out on us.
I'm not taking it out on you. I said enlighten me on the Bitcoin.
Okay, it's trading, this is the Merck contract, right? It's trading 1,500, 2,000, 1,700 contracts, right? And now it's consistently trading 7, 8, 9,000. It's already traded nearly 7,000 today, traded 10,000 yesterday, 10,000 last week. So I don't know if it's because of the SIBO contract, shutting down. But there is volume. There is volume confirming this rally in Bitcoin, and not blow you away volume, but it's being more actively traded.
In any regard, technicals, the things, it's been rallying. It's been in rally mode here for a while.
Yep.
So talk technicals. We talked about it before too when it was in 3,800, 3,900 area. And, we talked about it multiple times and just saying if I was a Bitcoin trader, I would not want to be short. But I'm not a Bitcoin trader. I don't know anything about Bitcoin. I don't know anything about crypto other than I don't believe in the long-term Bitcoin story. That's just, because of the energy consumption of it more than anything. Like I know everybody thinks it's the whole future, but when you're burning $5,000 worth of energy to produce one of these Bitcoins, it doesn't sound that efficient to me. But that's my thoughts. I maybe haven't read enough to understand the other benefits to it. But moving on to the equities is something I do understand. And we're stock traders. Let's talk the stocks because we got Twitter earnings, and I was very torn here. So I'd sold half of my Twitter position a while ago, around 34.90, which obviously I said, and it was on for a swing trade. And I'm like, I never like taking a swing trade through earnings. So I'm like, I should sell this before the earnings report because this is labeled as a swing trade, and there's no reason to take a swing trade through an earnings report because it's kind of a coin flip. But then I just look and I'm like analyzing, I'm thinking, you know what? even if they miss and the thing goes down, and the expected move is about $2.80. Even if they miss and it goes down $2-3, I'm like, it's probably going to bounce back because it's just what the stock market does. And I like the Momo rally yesterday as well. If you looked at a lot of stocks, we've been talking about this rotation from the Momo, from the higher growth names to value. You saw the rotation come off yesterday, and you saw stocks like CRM catch a bid. Stocks with higher multiples were catching a bid yesterday. So I'm like, you know what? They're going to report on the right day too, because we're looking, people are looking now, oh, I missed the, the Square rally because it rallied to $3 yesterday from the lows, or the CRM rally, or so this was the analysis that was going on in my head. I'm like, you know what? Even if this thing dips, I think it's going to come back. So I held it. I held it through the tape, which was a good call, obviously, at least at this point in time, because it's up $2 here. But it did dip. And what I probably should have been doing was having orders sitting out there to buy that dip, because it did not dip for long. First, Spencer, give us the numbers, give us the metrics, and Joel's going to break down this pre-market action.
Right. So Twitter is a little confusing. There's some confusion over the EPS number, which number was adjusted and which number wasn't. I'll give you the numbers. Twitter's non-GAAP. So this is their adjusted EPS number, which is the one the market's going off of this morning. It's 37 cents versus a 15-cent estimate. The adjusted was 9 cents, and I'll get to the why that was confusing later. But sales also beat 787 versus 775 million, so a beat on the EPS and sales in the first quarter. Their Q1 average monthly active users, 330 million, which is down a hair on a year-over-year basis. They gave some sales guidance as well. That was it was in line, more or less. But the confusion about the Q1 EPS was that they put the adjusted number first. The non-adjusted number first, but I think they mislabeled it, and the 37 cents was way lower in the release than the 9-cent number was. So I think all the algos read the 9-cent number, but it was the 37-cent number that really matters here.
Algos read this wrong, because if you look at the chart we're showing right now, you don't even notice that there's a little faded line right on, because it went down on the initial report into the 32 handle for about 5 milliseconds. And it was a little longer than that, because I could actually see it with my human eye, and it takes 50 milliseconds for your human eye to blink. So I did see it. So it was down there for maybe 5 or 10 seconds. It went 34, 33, 32. So whatever news algo was hitting that on that, immediately punished. Immediately wrong, because it bounced right back, and then they started ripping it. And 34 went, and 35 went, and 36 went, and 37 went. Now we're back down below 37, but this just has a tidy 5-point range here in the pre-market. So it looks like this morning that it's up, through $2.40, but it was actually down over $2 here.
Yep.
Over $2. So if you had an order sitting out there, you would have been executing. Maybe that's the thing to do, is just making and it's always scary to make markets, because if it's a really bad report, you get picked off at 32.5. In hindsight's 2020. You think, okay, yeah, if I would have had an order out there at 33, I'd been good to go. It's up 36, I'd be making money. But I mean, when you're sitting your order out there before the number comes out, and the numbers come out really bad, the thing could be at like 30 in your face. So it's always, tricky to just have your order sitting out there going into a number, because if those algos are correct, and obviously if that number is, really weak, you get picked off and you're going to have a big loser on your hands. So hindsight's always 2020, but the dip was bought again. Buy the dip continues to work.
Yeah, Twitter. Oh, big old range on this thing. Went down to 32.50. That coincides with your March 29th low. And then Boomer turned around, and on that same bracket, you hit 37.99. You've leaked off that $1.10, $1.20 right now. So I think you might have a little problems getting back up into that area. Full disclosure, I do have Twitter and a couple of longer term accounts. I haven't been playing it short term that much when I should have. I got a text from Sean Udall yesterday, and you got to talk about when you're hot, and when you're not, you're not. And between Qualcomm, PYX, and this Twitter, I think there's like a smoke cloud over Arizona right now, because that guy is on absolute fire.
It's crazy, man.
He said people kind of forgot about it, and I kind of agree.
I did too.
Yep. People forgot about it, and Snap went up on a downgrade. You have Facebook rallying. It's just not a news. Like Google, we don't talk about Google that much. It's just, it's quiet. It goes up every day, but it was just ignored. You're getting a pop. I looked at the calls. The 37 calls were going for like 65 cents. So if you bought those, it's crazy. You got to buy the common.
Yeah, and I tried to do the same thing, Joel. So and obviously, I said the story that I was going to hold through it. I was like, well, maybe and I thought about writing a call against it, and I could have wrote the 35 for $1.50, which in hindsight would actually just be paying me. But I was like, well, maybe I should just sell the stock and buy an upside call to participate in the print. And then I was looking at the premiums, and I'm like, you can't do it. You can't, like, even the 37s, I was like, or the 40s, I was like, I could go away and say, let's say they just blow it away. Even the 40s had like 40-cent premium or something like that. I mean, and this is, you're talking way, way, way out of the money. But I was looking, the 35 was $1.50. The 36 was over $1. I'm like, it's hard to pay that because the thing's got to go up. And you know what? Here you are, you call the direction correctly. If you bought those calls, you call it correctly. It's on your side. You're still not really making money. At 35, you're not making money. It's
tough.
just, it's tough. It's a tough gig. It's a tough gig to just buy calls and puts on stocks, playing them into the print. Money, I'm going to say again, and maybe it's because I'm trying to trade here at the same time. Maybe the best thing is the way Nick Chahine just does it, and he's just writing options, and that's why he makes money consistently. I think when you're just trying to play, okay, and there's going to be opportunities maybe for some lottos, and Nick does them every once in a while too. But more often than not, if you're flat out buying options, the premiums, just get jacked up too much into these events. And then the market makers, and it's not even the market makers know it. It's just the fact that there's people in there and they're selling when it gets up to that point. So it's tough. It's a tough gig to make money buying options.
It's even tougher trying to buy them on earnings. It really
is. It's just so much premium.
Yeah.
I mean,
unless you start 2-3 weeks ago. Yep.
But then I was looking and I was like, well, I could have sold, and maybe that would have been the thing to do. I could have sold. I was thinking about selling the 35 for $1.50, and it'd be 36.85. But then I'm like, well, if they really blow it away and it goes to 40, then we'd be ticked off. So all I did was hold it, and it worked out to be probably about the same here, at least so far, because it's 36.88 this morning. So actually, I guess a little bit better. If you bought that option for $1.50, it's worth $1.80 right now, but a hell of a lot of risk for that. So it's a tough gig buying options.
All right, we got a bevy of our earnings reports to cover. We just had Whirlpool last night. Let's go to Whirlpool. The Benton hit.
So many
Harbor,
big
Michigan.
moves here. Like, and maybe it stopped for a second just before you go on the Whirlpool numbers. Maybe the play is right now we're seeing some really outsized moves. I mean, KMB was a pretty big tip off. I did not see that much of a rally coming. And some of these value names that typically don't move as much, you are now seeing some major moves. Like, that is a huge move for Kimberly-Clark. We talked about that. That is a huge move for Whirlpool too, which we're going to talk about in a second. So maybe that's the play. Maybe you've got to look at stocks that traditionally don't move as much on earnings, but they kind of are right now. And maybe that's the ones you're playing. I mean, Coke had a pretty good move here this morning too. I don't know what the premiums were going into Coke, but I saw it trading in that 49 handle a little while ago. So, it's an interesting conversation we're going to get into in a second. Spencer, break down the Whirlpool resorts and do Coke with it too.
All right,
Coca-Cola.
Whirlpool beat on the EPS, missed on the sales, and they reaffirmed their guidance. So the EPS for Q1, $3.11 versus $2.92. Sales of $4.76 versus $4.87 billion. So, like I said, a beat and a miss there, and they reaffirmed their previously issued fiscal year EPS guidance of $14 to $15. Coke, on the other hand, beat and beat. They beat EPS 48 cents versus 46 cents, sales $8 billion versus $7.89 billion, and they also reaffirmed their previously issued fiscal year guidance. So mostly beats there.
Okay, so I'm just looking at the weeklies here, trying on Whirlpool and looking where they went off the board. Obviously, there's no options open this morning because they don't open until 9:30. But I'm kind of looking where the markets went off the board. There's a little bit of open interest here, and you know what? You're looking at it again, and it's the same thing. I mean, okay. And some of these are not that liquid, so you got to look where the bid and the ask was. They're wide. I mean, you're paying big spreads here too, Joel. Like, look at the 143. It went $2.98 to $5 on the closing. That was the closing bid ask. So it's $1 wide. No, it's $2 wide. So maybe you could get filled at $4. If you did that 143, well, you're 147. You're not that great there either. So even looking at something, yeah, you're making money, but you're not kinging it. And then let's go look at just Coca-Cola quickly here. I'm just going to try to go look at the Aprils too. Okay, Coke probably would have made you some money if you picked the right option, because they were only expecting a move in Coke. Well, try to see 47.5.
Still, the 48s went off the board at 46, and it's right now the intrinsic value is, I mean, they'll juice it a little bit more at like 80, 85. But, I tell you, I have messed with those, or traded, some of these thinner options, and you can get done in them. I mean, you don't have to necessarily pay up, but when you see those big spreads and you want to get done in the middle, you can get done in the middle. I mean, you can't be, of course, in earnings and everything and not a lot of volume, but I've traded some of these options that had, 500, 800, volume and, even less in open interest, and you can get done. But let's just go through the price action real quick on these. We got Nick coming on today. We're talking all options here. So why don't we, we wait until 8:35 and Nick can answer a lot of our questions. Whirlpool, you got initials.
I'm back, and I'm just going to go a little rant here again. I've said it multiple times. You know what? If I could do an anti-commercial for Skype, can I do that? The product is just not. It's got so many bugs. The new Skype so what happens here? I lost power. We had a little bit of hydro flicker. So for whatever reason, I've been trying to get my camera. Skype won't pick up the camera, but it's also got other bugs. For whatever reason, it wants to drop calls. When it can't get my camera, it wants to drop calls too. The new Skype, Microsoft, if you're listening, has so many bugs, and I wish I could go back, but I don't think they allow you to go back. So Microsoft got to get it together on that Skype. I mean, we're going to have to leave the product, I think. And we're probably going to find something else. Like, this is how we bring in, people from multiple areas. Like, we're going to bring Nick Chahine through Skype. But I've got the new Skype. I think Spencer on his main doesn't have the newest one. The newest one is full of bugs. So whatever Microsoft did in the last update, it's dropping calls. It can't pick up the camera. They've updated it too soon. So just very, very, very disappointed in Skype. And we might actually switch products. And it's been good for a while. But that's my anti-Microsoft, anti-Skype rant here.
You interrupted Joel's flow. So, Joel, back to the technicals.
Okay. All right. I'm back here. Whirlpool got a big old spike. The initial spike took it to 150.
And they must have known that I was just giving them the rant, because they dropped the call right in the middle of my Microsoft rant. They're like, they must be listening in on us. I give a little anti-Skype stuff, and they're like, okay, we're not going to let him say that on the radio. So we're just going to drop the call here in the middle of it. I don't know what to do, because it keeps dropping the call.
We do have Bill Gates signed into the YouTube chat. So it might be Bill himself this morning.
I can't understand for the life of me how Microsoft is as high. Maybe it's just selective perception. Maybe this is their only bad product. The stock keeps making new all-time highs, and I absolutely just think I've had multiple Microsoft problems here over the course of the last few years. I don't have these other problems on my Apple stuff, and it blows my mind that the stock keeps going straight up. But I don't know what's going on. Why there's so many bugs in the new Skype. I don't know how they can release a product that has that many bugs. And it's not just me. Somebody else had the same problem too. They did a Skype call. Somebody else was like, did you download the new Skype? And they said, yes. I'm like, that's your problem. The new Skype is full of bugs. Microsoft,
all right. Can we move on, please? Can we move on? Can we move on, please? Thank you.
Scared.
I am getting annoyed. I'm getting very annoyed. Yes, thank you. Whirlpool.
152.50. You pull back, just holding in here at 149 and change. So I don't know. It's hard to say 149 is support here, but since you hit that high, 152.50, 149 has been holding. So I kind of use that. I'd use the 152.50 as a nice juicy target if we could get up there. If you're looking for more, and there obviously could be more the way these stocks trade, you got a pair of highs in the 156 handle, monthly highs, that is, 156.51 and 156.75. For the Coca-Cola, I don't see how you could have such a bad earnings report one quarter and then such a good earnings report the next quarter. So I don't know. Now you're gapping to a gap area in Coca-Cola. I mean, that's not what Coca-Cola is supposed to do. You hit a high of 49.37. You've backed off to 48.81. I think it's going to be really super hard. In fact, Dennis, steak dinner that this doesn't close over 49.50.
I'm not going to take you on that because it's got some work to do, but I would say it's not out of the realm of possibility after I saw that KMB move yesterday. Both me and you Both me
Wrong.
and you thought when it started leaking at 127, I'm like, this could struggle to open over 125. It opened at the low and it ran. So, we did not see, neither of us saw that coming and going all the way up to 132. But so some of these consumer product stocks right now are hot. I mean, Procter & Gamble reported here too. We'll talk about that in a second. But I think it's probably a little bit of an issue of a crowded trade in PG. Even after hours last night, they were buying it. You had multiple people in fast money saying they were going to buy it into it. I think it just got crowded. And because we saw all the consumer product stocks like KMB and, and not even that, Whirlpool last night and there was another couple there too that were going way up on their reports. And I think it just got crowded. Maybe Procter & Gamble. It was too obvious.
Right. Can I
Well,
just
what
say
were the numbers? Give us the numbers for the Procter & Gamble.
Wait, I want to say one thing
Go
about
ahead.
this Kimberly Clark, okay? Let's say you did listen to us, all right, and you did short that open.
Well, we didn't say to short it. Stop.
No,
We
I didn't say to say short the. I'm just saying if. I'm just trying to make a point of the opening print, okay? Regardless of what we say, a lot of things we talk about the emphasis of the open, right? So if you were so inclined, I'm not saying we told you to do it. If you shorted that open at 127.93, you never saw daylight on that. That open was that the New York low too, Dennis?
Real close to it. It opened near the lows.
Yeah. So I'm not saying we
I
did.
was trying to buy it in the 125 one because it indicated at 928, it indicated 125, and I said that size was in the book. But then more people came in, and it ended up opening, like you said, up near 128. The initial indication was 125. I threw 126. I'm like, well, this thing's trade 128 all morning, 127 all morning. If it wants to open 126, I think it'll pull up. Right. So I was trying to use that open to, and that's what you got to understand too, is, when we're talking about a lot of times these sell imbalance, I see a big sell imbalance. A lot of times it's an opportunity to buy it because it's going to push the price too low. So I'm more of a fader of imbalances than that. I did not see that rally coming. I thought, it goes 127, 128. I think it would run out of gas. It didn't. It ran straight up to 132. But just to let you guys know, like when we talk about sell imbalances, we're not saying, oh, go out here and sell the open. That's exact opposite usually of what we're talking about. I'm trying to give you opportunities where I think a stock is going to open too low. So if we're talking about a huge sell imbalance and the stock's trading flat, okay, well maybe there's a chance to short pre-market rebuy the open, but that's always a little risky because the imbalance could change. But there's an opportunity usually. Maybe the stock's going to open too low, and that's going to give you an opportunity to get the stock on the cheap. So that's kind of what we're highlighting. I mean, there's a million ways to play these imbalances. It's just information. It's how you interpret that information. But I just want, because some people might think, oh, you say sell imbalances, that means sell. Not at all. It's actually often the opposite. When you get a huge sell imbalance, it's going to push the price too low, which usually makes me want to buy it.
Yeah, no, we talk about that too, especially with thicker stocks. And a lot of times you see something trading way up in the pre-market, but then there's a lot of stock for sale. So the designated market maker, boom, takes those offers, opens it flat, and then then immediately you get that pop. So we do discuss that strategy as well, depending.
Sure.
KMB is a little bit tougher of a stock, right? Because, if it takes on one area, there might not be another area for a couple bucks.
That's a great point, too. It's all about liquidity. And KMB, when it's breaking out to new highs, these are levels that go to KMB that we haven't been up to in a couple of years. So, you look out to the weeklies, it's going to be probably wide open. So when you go 128, we even said in the book, I'm like, once you get through 125, it's kind of thin in there. So, and that's the nice thing about looking at the books, that you can kind of gauge. I mean, you get a stock like Coke that reports, well, it's thick everywhere. So if you miss one level, you're probably going to be able to grab and cover it, 10, 15 cents up. You get short KMB on that opening print, you're 2 points underwater in seconds. So it's tricky. It's tricky to trade the thinner stocks on earnings. I mean, PG could be the same thing here today, too. It'll be thinner today. It's had a pretty good run here. It's down on the report, which maybe this is the time to give those numbers, Spencer, and then we can break down PG. But give us the numbers.
Okay, Procter & Gamble Q3 EPS $1.06 versus $1.03 estimate. Sales of 16.46 for $16.34 billion. So they beat on both the EPS and sales for what was their third quarter. Again, reaffirmed their previously issued guidance for the fiscal year. That's it.
Let's see here. Pretty big range here in Procter & Gamble. Just kind of bunched up near the all-time high here. Some real strong candles. Your initial spike, I took it down to 104 even. You're holding 104 here. I can't really. Let me see if I can find anything on the dailies. Yeah, I see 1, 2, 3, 4 lows in the 104 area. So I say the buy the dippers will prevail if 104 can hold. If not, you see the lows in the 103.5 and 103.17 area. So keeping an eye on 104 and in the BZ chat, I know Aviator One is a huge Procter & Gamble fan, so maybe he could pop in and give his opinion on it. But to me, it looks like 104 needs to hold.
Okay, jump over here. There's just a ton of earnings, so if you've got a specific stock that you want to talk about this morning, let us know. Otherwise, we're just going to take it with what we have. We've got to talk Hasbro. This is another one that is having a huge move. I don't know if anybody was pricing in $14. We should go look at the expected move. I can do that while maybe Spencer gives us the numbers here. But $14. I mean, if you weren't making money on options on this one, you're never making money on buying options.
Q1 EPS 21 cents versus 10 cents on a year last year. So I don't know if there's an estimate, but 10 cents a year ago, 21 cents last quarter. Sales 732 million, up from 716 last year. Let's see. Did they give guidance? Nope. They just said they're on track to deliver profitable growth in the fiscal year 2019.
Okay, you are making money.
Yes, they are making money. And where are we at now?
I think we just lost Dennis.
That's okay. We'll get him back.
Do we want to?
All right, back to the chart, Joe.
I don't know what you're talking about. So
yeah, no, we're laughing. Dennis, Joel asked if we wanted to get you back. We want to get you back.
It's just literally. Maybe we don't
back.
want to do the show without me today. It's dropped the call 5 times. Skype is
really.
We want to get you back, Dennis.
5 times.
Come back.
So I know Spencer doesn't want me to rant on Microsoft anymore. He's thrown that at our chat there, talking about it, but it's dropped the call 5 times. And you know what the funny thing is? It said rate. It gives you rate my call at the end of it. So I gave it 1 star, obviously, because it can't hold the call. I don't know if they're going to call me back on that. Anyways, if you're trading Hasbro on the option side, you made money on this one. Because hey, check it out. 89's $2.50. 90's $2.20. You're rolling in it. If you were really on a flyer and you went out and bought the 95s for 60 cents, congratulations. You are making some serious money on this Hasbro. So nobody saw. Expected move on Hasbro was, wait for it, $6. 14, you are making money. Straddle buyers are making money even. Everybody having an options party. We found one that you made money on.
103.90 is where they took that to off the print. You've backed off just a little bit, 102.41. So $1.50 off that pre-market high. I would use that as a target. You haven't traded in triple digits in this since November of last year when you had a 100.85 high. And the previous month's high was 107.57. So I'll just give you that. It's just the next absolutely crazy target in this one. If you're buying this off the open, congratulations, because I want to know where to buy it or where to stop out. I would say maybe folks will get a little nervous. It goes back into in the double digits as opposed to triple digits. But right now, not far off that 103.90 high.
Lockheed Martin, LMT up $17. The expected move might have been more on this one because it always moves a lot. But here's a stock that has just been an absolute monster here too. I mean, look at these moves where we were back on December the 28th or December the 20th, the day after Christmas. I guess it was the 27th, or the 26th. But holy cow! I mean, we're $241. We're now $330. This is up 100 points here in the last 4 months. It makes you stop and just think like, wow. You know, if you were buying back at the beginning of, January or, the late December when we were selling off everything, it seems like almost every stock, you scramble to find something that isn't up 15 to 20%. Huge move for Lockheed Martin. Since then, it's up another 17 points on earnings. The party continues.
The Q1 EPS, $5.99 versus a $4.34 estimate. Sales 14.34 versus $12.52 billion. So big beats for both the EPS and the sales numbers in the Q1. They also raised their guidance for the fiscal year, their fiscal year EPS guidance. They raised it by about 90 cents, 19.15 to 20.05 on the low end of that range. They also raised their fiscal year sales guidance as well, $55.7 to $56.7 billion on the low end of the range there. So a beat and a raise.
339. That's all I want to give you. That's a double top. On the 15-minute chart, you've backed off $7.50 since then, and you're still up 16.24. So I don't know. Who knows? You can get through 339. You get through 339. Just might as well call 351.35 your October of 2018 high. But here you backed off $8 from the high. Probably impossible to determine from the book, Dennis, if there's anything to sell on this one, because there's just so many. It's usually
pretty thin. Yeah, these $300 stocks that don't trade, fun. They're not Dow components or anything, so it's not lettered. 325 is 17,000 shares, but it's already traded 67. So I mean, it's going to blow through that. Then 330, 8,300, it's going to blow through that because you had those ups 30,000, already trade 60, and we're still an hour to go before the open. So it's probably going to do 150 before the open, which means the book is meaningless. So, and just that's, it's just math. You're adding it up, and when you see that much pre-market volume trading above that level, it's not going to hold the opening print down. So it's math. I mean, it can go wherever it wants. It's basically what's saying the book is meaningless.
Bunch of buying balances here, Dennis, on this.
Let's go take a look.
On this Tuesday morning?
There's a few. They're small. I don't see anything really. Twitter, 98,000 to buy. We know Twitter's trading up here. Coke's 33,000 to buy. We know it's trading. That's early. They're holding the orders tight because there's not a lot out there right now. WY, 44,000 to sell. That one kind of stands out because it's not a stock that trades a lot in the pre-market. But no, they're small.
Okay. We got Nick coming on here in a few minutes, and I need to go catch my robo-taxi. It's pulling up right now. It's going to take me out for some breakfast here. So I figured before my robo-taxi got here, we talked. I'm going to be the first one that gets the million. I'm going to be on the first drive there. So let's just talk a little. Let's just talk a little Tesla here. And it usually pops on these events, Dennis. And I did see it
usually before the events, and it didn't even pop before the event. It was selling off before the event. This gets a negative headline every day, does it not? Like, I feel like every single day, analyst is commentating or giving negative commentary on it. Somebody on TV is talking negative about it. It seems like every single day. It's due to report tomorrow, so obviously this is going to be the earnings day here. Is it after hour? Is it after the bell?
They're always after the bell, I believe.
Yeah, so you got tomorrow's trade in here too. I mean, I have such a small position in this, I don't even think about it anymore. It's the smallest position out of like 100 stocks in my portfolio. It's the smallest one, and it's about half the size of any other one, I think. So it's, well, maybe not that small, but very small. So I don't know. Like, do I hold it? Maybe I hold it through it. I'm kind of just thinking the rating's on the wall here. I mean, this has just had so many bad headlines, but everybody hates it so much that you wonder, like, okay, they're probably going to do something disastrous into the quarter because it's just been negative headline after negative headline. But is that all priced in? I mean, I don't know. This stock is resilient. I'll give you one thing. You got to say, in the last couple of weeks, with as many negative headlines, and Spencer, you can go to the Pro and start looking.
There are a lot.
With as many negative headlines as we've had, the stock's really not down that much from where it was.
Trading range. It's been in a trading range, and we've talked about this really since 2017. And the bottom of that trading range has been 240. This is called 245 because this is it's a high price stock. But you've been between 245 and then when it got to 389, that was when he said it was going to 420. So there you go. I mean, it's coming down to the bottom of the trading range. So I don't know if I'd want to be long at like 270, 280, but man, oh man, a trading range has held since 2017. Yeah. Maybe just blindly, if you really want to own it, if you're a believer in the story, there's your area. Looks like you're going to get a chance off the report. And it's, usually they do the reports and announcement, and here they did the announcement before the report. So I don't know. The analyst coverage of this was not good. They were like, didn't seem like he had a plan. I did not listen to it, but we'll see. Bottom of the trading range is called 245, but it is now 835 on this
I just want to
Tuesday.
say, this analyst commentary just today. So I've got
listen to it.
Dozens of headlines from Tesla. We got Cowen lowering their price target today. Another analyst. This is every day. Needham reiterates their underperform rating. This is so hated. This has got to be one of the most hated stocks that I've ever seen. My Twitter.
Who are we hating on?
What's that?
Who are we hating on?
I'm just saying Tesla. It's got to be one of the most hated stocks that have ever existed. It's people like it or they hate it. There's no in between. And on your Twitter feed, would you agree with me on this, Nick? You look on your Twitter feed, all I see whenever Tesla has a negative headline, so much, maybe it's the people I follow, but there's so much Tesla hate. The stock is just hated.
Yeah, it's priced for a disaster. Which
it always seems to be priced for a disaster.
Yeah, but the difference is there's no love anymore. Elon is no longer, walking on water, so to speak. Yeah. In fact, he's the problem. He is the reason it's hated, I think. I'm not an expert on Tesla.
He's the reason it exists too. So, what is Tesla? And Kramer's made this argument. This is a good conversation. Kramer's made this argument, and multiple times I heard on Mad Money. So the best thing for Tesla would be to lose Elon Musk. And I'm like, well, I don't understand that because I think he's still the genius behind it all. The best thing for Tesla would just be to keep him quiet from social activities. He's obviously, does detriment to his stock every time he speaks up. Just create the stuff and stay out of the public. So that would be the best thing for Tesla.
So let's take emotion out of it. And if you look at the stock, it's and you take all the lines out of there and look at the weekly action, and right here it's on a neckline that's been a pivot for 5 years. It's anything around 250, 240 is a pivot for 5 years. So take the emotions out of it, and you say if its stock chart is falling and approaching such a zone, this zone tends to be support, in my opinion, until it breaks. So onus is on the bear to take the message from the earnings that are coming this week and say, you know what, this sucks. We're gonna bring it down 250, below 250. And if that's the case, then it could target 200.
Expected move into earnings looks to be about $23. How are you playing this, Nick? Is this one you're going to be playing, or is this just too wild?
It's I sold some long dated puts on it. They're green. I will defend them a little.
Where were you comfortable selling puts on this? Because it's a scary stock to sell puts on. Because some people think this is. There's people in the media that really, and maybe it is. I don't know. I don't think it is. I'm wrong. But there's people that think it's a zero.
As a company, as a car company, this stock is. Why is it over 100? Why does it have any premium over GM? That
was my argument for a long time.
Right. But then the selling point for a long time while we were making this argument, us sane people, is that, it's not a car company. Well, it sure is like it right now. Nobody's talking about anything else but the stinking car. And not only the car, the Model 3. Yeah. So, is it a car? Is it not a car? I haven't heard any bulls that say it's not a car company. It's this and that and this and that. And yesterday, listening to Elon on about whatever the fleet that they're going to have self-driving cars, he throws out dates like that he makes up on the fly. So, something like, and this is what he says, something like this and something like that. So maybe he's a genius, maybe he's not. I'm not that qualified. But as a chart, this should be support. But onus is on the bears to break through it, and if they do, they will get rewarded. So how do I protect? I buy puts shorter dated. Sacrifice puts. So if I have $1,000 at risk, why wouldn't I spend $50 or $100 to protect it if I can? So that's what you would do. So if you're committed to the stock long term, why not buy a few puts to protect yourself?
Well, my question would be just playing devil's advocate with you, not saying I would do that, but if you're spending, and in this case, to buy the put, like let's say you want to protect yourself below 250, you're going to pay. I'm just going to grab the numbers right now in front of me because it's closed. $6.50. I mean, if you do that every quarter, it adds up to 10% a year. Is that?
Let me ask you this.
Yeah.
You drive a nice car.
Yeah.
You drive a nice car. What is your premium on the insurance? Do you decide whether you buy insurance or not based on the fact that the premium is expensive or not, or do you just buy insurance?
But you're in the business of selling insurance, Nick. This is going exact
Right,
opposite.
but I can sell the
business.
sacrifice. Okay, so the put I sell is $17. The put I'm buying is barely $2-3 if I buy it. So I'm not saying protect at the line, but there must be a line where you say, below this, I'm out.
Yeah.
So I would hold the stock until this, and then I'm out.
So maybe you go down like the 230s and say I'll buy those, or 225s, I'll buy those for $1 or something.
But you can turn it around. So the premiums are expensive this week. So you do a calendar. You sell this week's premium and you buy the premium you want to protect that out in time. So you buy yourself a calendar or even a diagonal. So what happens is, because this week is elevated, you sell it and you buy the week out or 2-3 weeks out. So it's another way of, you'd have to know the options premium. But to sit on a pile of money invested in a company this iffy at this point, with the chart this iffy at this point, is I don't know, it's a lot of faith. And
so when you're writing a put, you're always buying one that's lower on this Tesla then. So you said you wrote some puts, correct?
Yes, I buy sacrifice puts, that's for sure.
So just can you tell us what you've got on right now in Tesla?
Sure. So if I sell the hold on, let me switch my screens here.
Sure.
I wasn't ready for this. So if I sell the 150 put out to January, that pays $10. Okay. So I can buy the May 150 put for 70 cents. So I can buy the June 150 put for $1.60. So I'm collecting $10. I'm spending $1.60 for protection through middle of June. That's 59 days of protection. So that's one thing I could do with that stock. This is a really violent stock, and that's why the premiums are so high. And the applied volatility in the short term is elevated, so I don't want to buy this week's for protection because A, it expires this week, and B, it's too expensive. I'm paying a lot more for it. So I would sell it and buy one out if I want to game it that way. But it's easier for me to go out and spend a few bucks on a sacrifice put and fall asleep and sleep on it for, time. And if the stock goes to zero between now and middle of June, I lost nothing, because then I'm put the stock because I committed to it for the January, but I also own the right to sell it at exactly the same price.
All right, now we're done with the Tesla talk here. That's, I don't want to cut it short or anything here. Nick, before we go into individual issues here, we were just talking about the moves in some of these stocks, like Twitter. If you were buying the 37s yesterday at 60 cents, you called a nice move, you're out of the money. I know that you kind of like to go, like you start looking at the earnings. What are you looking at? A week out, 2 weeks out, 3 weeks out? And before they really start to juice the premium, the weeklies, and you don't have to give away all your tricks here, but just kind of how do you do that? And then if I remember correctly, if it's going your way, you kind of sell out of part of it, and then maybe go lotto in what's your time frame on things like this, and what characteristics does a stock have to have in order for you to do that?
Okay, if I understand the question correctly, kind of how do I choose my time frame to invest? It all depends on if I'm playing a specific event, and in this case, it would be. So if you flipped a coin yesterday and you thought Twitter was going to go up, then you're holding calls or you're holding the stock, and is it time to bail out of it or not? This morning's spike, I think, takes it to the level of about December-ish, which failed. And a little bit before it failed, and a little bit before it failed, and a little bit before that, it failed miserably on last July's earnings. So now onus is on the bulls to break through this level and hold it. Now, the good news for the bulls is that if they can do that, it has 42 in sight. And then if you zoom out to a weekly chart, it has 48 in sight, but each one with its own trigger. The first trigger is 36-ish. That's the first zone. That's a hurdle. So if I wanted to play the upside of that, I would go out in time. I would do either the straight stock if I don't do options, or I would sell puts or put spreads shorter term because I believe in the upside. So I can either risk money out of pocket or risk money if it falls, or I can buy some calls and call spreads, and I would definitely go out in time. I don't shy about paying premium when it's realistic and within with a specific reason to do it. And then once you do that, you have to know where to get out. So if 36 fails, then all bets are off, and then it's still mired in that zone below 36. So in this Twitter event, I will go out in time, even to the end of the year. It all depends on what is available as far as premiums are concerned and my style of trading. I think that's what you were asking.
Okay. No, that's a great explanation here. We always like your general market thoughts here. And I wouldn't call it like a melt up. What would you call it? It's not really it's a slow melt up here. Tight ranges over the last few sessions, just won't go down. Trying to bust over the high of the move here at 29.2350. It seems like we've been, and I could pull up the dailies here and give you the exact. I had 5 out of 6 closes in the same area, and here we are at the high of the move. Just ranges contracting, no volatility here. I guess that favors another leg higher. What are you keying on here for a technical basis?
The bulls are in charge for now, and you say it won't go down. I guess it's a matter of time frame we're talking about, because sure. I see we're a lot higher than before, and we fell fast just a few hours ago. So the sellers cannot. We're in the mode where the sellers cannot maintain the selling for long. This is the opposite of what we had in December. And people say we've gone too far too fast. I think we fell faster than we're rising, and we're just getting back to the same neckline. Same as Twitter. Okay. We have a neckline here. So if the buyers continue to be in control for just a few more days, or maybe a couple of weeks, or maybe through this earnings season, maybe Apple will get us over the hump and close above it. There is a lot more upside to go. The P&Ls are proving it. Even boring old Coke delivered a strong beat and organic growth, 5 or 6% or whatever. So this is not an exciting company yet. It's moving up. Verizon, I think, reported good numbers. So I don't think anybody completely delivered a debacle. So it's warranted. Higher prices are warranted. People say the S&P is so expensive, but they look at the whole. I don't know how they measure that. I mean, maybe they can measure an overall PE, but I don't know what's in it. I want to know the mega caps are driving the indices, and that's all I care about.
Right, yeah, the big stocks are moving it here, and let's just take a look. I know you've been riding Apple here into earnings. Why don't you give us some upside targets in this one?
Okay, so Apple is in a breakout mode in my opinion, from 198-ish, and it should be 220 based on purely on that. Now, the event coming in will make it a binary outcome. So hopefully Tim Cook is not pulling an Elon Musk here. So hopefully he has something good to deliver. Now, I think what it has going for it this time around is that they don't report unit sales. So even if he has a bad iPhone quarter, he can say, well, the overall sales picture looks like this.
We won't know if they do.
Exactly. So it's easier to hide a mistake, is what I'm saying. So that the sellers cannot hunt one headline and say, oh my gosh, we had X units below expectations, sell. So maybe that causes it to be able to close the gap all the way to, I think there's a gap to $217. Okay. But technically it should have a lot more upside to go. But again, it's a binary event. And maybe it starts moving on Facebook. You saw what Netflix did yesterday. It was pretty crazy. So there's more upside to go, and Apple could help us get over the hump. We have Amazon, I think, on Thursday. So it's a big, big week.
All right. Nick Chahine is the author of Create Income with Option Spreads. Joins us every other week. Nick, as always, thanks for the time. And we'll talk to you in a couple weeks.
Looking forward to it. One thing on the small caps, they're kind of lagging. So are they going to play catch up, or are they canary in the coal mine?
Thanks, Nick.
All right. Talk to you later. Bye.
S&P futures, we hit 1675. That was just above the high from Monday, the real high, the Globex high at 1575. We have backed off a couple points off that, so we'll use that as resistance. Above that, We have last Wednesday's high. That's the high of the move, 29.2350. And then the high close of the move is 12.50, and that's been matched twice. So with all the price action today, up and down, I'm just looking for a new high for the move, a closing high for the move. Doesn't necessarily have to be a new price high on the upside, but 29.1250, can't get that level out of my head. Spencer, did you bring back Triple D? I see
I'm
Triple
here.
D.
I
All
did,
right.
and I wanted to go.
I'm here until Skype drops a call. So
I want
let's go to LYFT quickly.
Yes, LYFT.
Lift me up.
So LYFT, their analyst quiet period is up today. Dennis, you had asked on the pre-market show, you had asked me if there's any way to know that the quiet period would be up. I don't think there's any hard and fast date. It depends on the IPO. So, for example, LYFT IPO 25 days, I think, is the minimum. It's what LYFT IPO 25 days ago. But Snapchat's quiet period ended after 30 days. Levi Strauss's was 28 days. Dropbox's was 31 days.
So you don't know.
Who sets these quiet periods?
It's it may be in the S1. I'm not sure. But I think it's anywhere from like 25 to 40 days is like the general range of when quiet periods end. It has to be at least 25 days, which is what LYFT is.
And what we're
today.
talking about is this is a quiet period and ends, and then analysts
the
can obviously
underwriters
come in and give their commentary.
Well,
and that's what we're seeing happen here today.
The analysts who underwrote the stock can come in.
Yeah.
And
and they're all jumping in.
Yeah, they're all jumping in, and here are the ratings we have today. Or the initiations. Buy, outperform, overweight, buy, overweight, outperform, buy, outperform. So everyone coming, and KeyBank coming out at sector weight neutral. KeyBank coming out at neutral and a $67 price target. So they're the outliers this morning. Everyone else, JP Morgan, Jefferies, Stifel, Piper, Raymond James, UBS, et cetera, all coming out by this morning. Price targets ranging from $75 to $86. KeyBank is the outlier here, like I said, with the neutral, but we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. I think 12 initiations at buy or outperform or overweight this morning.
Boy, oh boy. This one, I bet you these analysts are glad that the quiet period was this long, because I like to see what their opinions were when it worked at 87 and then nosedive. I think we lost. I don't know if we have Dennis back.
Of course
on
we did. It dropped 3 times in the last minute. It's amazing. Amazing how bad the Skype is.
Dennis, did you
I might as well. I can't talk because it's going to drop the call.
Okay, real quick. The LYFT. Did you ever get your LYFT back? Because I know you tried to. You bought it.
I bought it, and I got almost the bottom, and I sold it, and I made a little bit of money. I didn't rebuy it though, so I had it on just for, I was risking $1 to make 3. It did that, and now obviously it's taking off and going higher here. So that's why I was asking, like, is there a way to know in these quiet periods? Because it's kind of predictable that the people who are involved in the underwriting are probably not going to be bearish on the stock when they're coming in. So like, we should almost like look at that and see how many of these quiet periods when they come in, it's usually probably pretty positive, the commentary coming in. So it's almost like you see all these ratings here today. It's almost a little bit predictable that when this quiet period ends, that it's probably going to give the stock a little bit of a push.
Well, that's why KeyBank is so surprising this morning. The neutral rating and the $67 price target, which is the lowest of the bunch. So KeyBank with the neutral, like I said, but 12 different ratings firms this morning coming out with buy ratings. And some of them are big.
Take it with a grain of salt. I mean, when you have people that are involved in the underwriting, they're coming out with buy ratings, they basically don't have a choice. I mean, they're going to come out and come with sell ratings on something that they underwrote, because obviously then they're telling you they underwrote it way too high, especially when it's trading below the price.
Right.
So, that's maybe another reason why it's only up $1.20. You see all these positive commentary here today, you think, wow, it should be a lot higher, but a lot of this was expected.
But yeah, so I don't have a hard and fast date for you as far as when the quiet period is up for every single IPO. It does differ, like I said, but check out the S1. If anyone can find a confirmed source for me on where they find this information every time, I'd be awesome. That'd be very curious to know where that is.
We'd have me too, Triple D Trader, if you find that. I would like to know how you find these dates out. ahead of time.
But it is anywhere.
Never researched it myself, so I'll do some digging too.
It is anywhere. It's anywhere from 25 to 40 days is when that quiet period is up for the analysts, and then of course different from the lockup expiration, which is 180 days later, and we'll have that in a few months. But Joel, you were about to say something.
I was going to say that you had the all-time high at 88.90, right? That was just off the IPO, and then you made a low at 55.56. And Dennis, without doing the math real quick, where do you think the 50% retracement is? And it's a common number. It's a number where it was supposed to be priced at. $72.
72.
Yep.
Funny how these things work out like that.
Yep. So I'm not going to say there's no resistance up to 72, but man, that was
not much in there.
No, there's not. And if this things get rolled into the upside here, 61. Well, we're through 61.48. Let's see what at 62.30. That was your high back on April 11th, and then things really open up to 67.35. Trading at the highs of the pre-market session, so I'll see what happens to 62.30. And I'm kicking myself too here, because when it had that 3-point pop off the move and we were talking about it, it perfectly in 2 days in a row it came down to that 50% area, of that initial surge from 57.60 and 57.65. So textbook technical on this one. Maybe I'll wait for a little pullback, but I wouldn't be out of this question, this thing going to $72.
Well, wouldn't there be a lot at 72? Not in the book, but that's where the institutions got.
There's a lot everywhere. A lot of people are stuck on this thing, buying it all the way down. But
Right.
I'm just trying to give levels, and it's not a hard and fast level. Sometimes it'll go up to 71.50, sometimes it'll go to 72.50. But I think a lot of these programs, incorporate retracements and daily highs, lows. They're a lot smarter than me. They do historical testing, and they figure out these areas. So that's just an area. It trading up today did get a lot of analyst love here. I did see some higher price targets, and you're probably going to get some more. You have another update today, and someone may else come out bullish on it. But lucky for them that they're doing. They didn't have to make a call until they get traded for a couple weeks.
What about Qualcomm here, Joel? Upgraded at Morgan Stanley.
Man.
Price target raised from $55 to $95.
Boy, oh boy. what are you going to say? I'll just go with Sean. That's a low price target. I don't know why they're being so conservative on that one. Trading up $1.93 at the highs of the pre-market session. So everyone that did bought and chase on that one still continue to be rewarded. Just kind of, let's see what we're doing in the pre-market. As I said, up $1.93. I need to adjust my chart to see the pre-market high. It's just all momentum in this one. I guess you could use that former high as support. Yeah, no quit yet. 84.22 is your pre-market high. You're trading right there at 83.90, decent volume as well. And even on the monthly charts here, monthly 82 was a level back in July of 2014. So you even have to go farther than that. Just instead of trying to pick a top, just maybe, move your sell stop up and let them come and get you on some bad news.
And we haven't talked pot yet, but what about that Chronos from yesterday, Joel?
What was the driver on that one? I did not see just the whole sector.
I don't know. I didn't see if there was a fundamental driver. I didn't see it. Chat, if you want to help us out, but that's a big candle.
I just think that just found support. Institutions loaded up here. You had 1, 2, 3, 4, 5 lows at the 1560 area. The sector's moving, and they just upped their bids and took it all the way to $17. You're getting follow through on that. Boom. Let's see what happens at 17. That's an interesting level to me. 17.12, your April 15th high. Your high on Thursday, 17.12. Your high today, 17. So trying a little mini breakout here, holding 17. Let's see, one minor target, 17.65, and then a double top, let's call it 18.10 for that one. And then the other one, who Sean was talking about last week, got a boost. What is it? Morgan Stanley took a pretty big stake in this one. PYX, they took a large stake, and that got it off the mat. added over $3 yesterday, continuing in the green today. So it helps. It helps with the whole sector. Before we wrap things up, Randall popping in real late on Abbott Labs. Let's just take out of favor. This thing has been out of favor along with the other drug stocks, but you know what? Starting to find some support here. I like the low. I like the 72.50 area. If you get back down there, you've had two lows at 236 and 275. So look at some of these other stocks too. See if they started to bottom yet. Merck is trying to find a home under 73. So these stocks have had a big haircut. If you are trying them, maybe lean on the low of the move. All right, we lost Dennis again, right?
No, we did, but that's okay because we're done with today's show. Anyway, on our radar for this afternoon, as far as earnings are concerned, I'm seeing Snapchat, iRobot, eBay, some of the brokerages, TD Ameritrade. Those are the big ones. Not too many today, but then some. Tomorrow's the biggest day of the week, or tomorrow, Thursday. So looking ahead to that on tomorrow's show. Thanks to our guest today, Nick Chahine. Thanks to all of you in our chats. Want to remind you all, if you want to come meet us live in person, watch PreMarket Prep live as well, you can do so at the upcoming Benzinga Trading Summit, June 20th in New York City. Go to benzingatradingsummit.com to learn more. Enter the promo code PMP15 to get 15% off any ticket at the conference. So that's benzingatradingsummit.com, June 20th in New York City. Hope you all had a good day. Hope you had a good day. Hope you had a good evening. Hope you have a good rest of your day. Everything. We'll see you tomorrow, and have a good one.